Hello and welcome to Crux Investor. We caught up with Serafino Iacono. He's the CEO of Grant Colombia. Spoke to him 2 years ago, would you believe? They have been moving the pieces around their chessboard. We talked through all of the moving parts with him. If you want our thoughts and opinions on that conversation, the business plan, the company itself, and the man himself, you can find that at cruxinvestor.com. And if you want to see precisely what we talked about, take a look in the description below. Serafino, how are you, sir? Long time no speak.
Long time. It's been almost a couple of years.
It has. You were in London. That's how long ago it was. That's how long ago it was. I'm glad. So where are you today? Where do we find you?
I'm in Punta Cana for a few months, working out of Punta Cana.
Fantastic. Good. And how's everyone surviving the COVID onslaught down there? Is it a
well,
big thing?
over here is not that bad. Over here, they've only had since in the year and a half a very low amount of debt. I got my shots about 3 months ago, so this is a little United States, so it's a lot easier to be here.
Fantastic. Okay. Hey, well, look, I wanted to catch up because we've spoken offline, but we haven't done an interview about what you guys have been up to because you've done a few quite interesting things, and I'm sort of intrigued. But first, it might be worth. I usually get people to kick off the 1 minute overview, but I think it'll take about 10 minutes to get through it because you've been busy. Maybe the easiest way is go where you were and where you are now. So there's lots of new additions and lots of new things, and I'll probably pick up on a few of those topics if I may. So why don't you kick off with what you've been doing?
Sure. Since we've seen each other, we had a great conversation, and I remember the conversation talking about what Grant Colombia was going to do at the time. It was stabilize production, lower cost, develop the Marmato mine, and the acquisitions that we had made at that time of Goldex was something that we were monitoring to see if it was going to be something that we were going to do. Well, we've done a lot of things since then, real quick, so that then we can go into the grain of things. Number one, the production of the company is done fantastic. Grant Colombia is producing this year is going to do 200 to 220,000 ounces is our guidance. We're very much on track. We brought our costs down. The news of the company is that we're now paying a dividend. So this is a dividend paying company, pays a 3% dividend a year. Our debt from last time that we spoke, that was close to $90 million. It's down to less than 19, and by the end of the year, it's going to be down to 0. So all positive things. The most important positive thing that we did, we took something that was giving us zero value, which was Aris Gold, the Marmato mine, and we financed it. We raised $300 million, and it is now in the hands of a very capable management team headed by Neil Woodyear that is running the company. We're very happy with that. And for us now it's an investment, but we created value for our shareholders. And the other thing that we have done, we are started looking at investments like Goldex. We waited almost 2 years. Goldex matured as a project. It's a fantastic multi-million ounce project. And last week, we closed the acquisition of that. And we have put in our portfolio additional things to look at.
Quite a few moving. Thanks for keeping it simple, by the way. Let's kind of go in, into certain components. I probably don't have time today to cover everything because I think each one could probably is a conversation on its own. So let's look at the cornerstone component. Obviously, Segovia. That's the thing that's throwing out the cash. That's allowing you to do all of these things. So you've issued what guidance at 200 to 220,000 ounces, and you've got the numbers down to what? AISC or cash?
We have right now we're producing our gold with all-in sustainable costs, true all-in sustainable cost, less than all-in at about less than $1,100. It's at about 1,500 somewhere around there. Right. That includes servicing of debt and all of that. So let's talk about the production, because I think that's the key, as you say, that we have to develop ourselves on. The company is doing fantastic. It's producing, our last year we did two net of what Marmato gave us, 200,000 ounces. This year we're going to do 200 to 220,000 ounces of gold. Our debt is gone, almost gone, and by the end of the year it's going to be gone. So that gives us the capability of giving a dividend. The dividend is a fantastic dividend to pay. It's one of the highest dividends that is being paid by a mining company. In the rank of the top 5 companies, we pay 3% dividend, which amounts to a nice amount of money paid on a monthly basis. The company has got a bright future. We're going to be concentrating ourselves in the next 12 months to develop the other 24 fronts that we have in the mine, not only where we're producing our material, but also where we're producing our material, we still keep on finding fantastic grades. Today we announced a lot of results that people should pay attention to. Incredible high grades. That it shows us that Segovia has a long way to go and a lot of reserves still to be found.
Okay, so Segovia is this high-grade underground mine. What's remind me the life of mine currently? What do we know?
Oh, right now we have 2.5 million ounces in resources, plus 600,000 ounces in reserves.
Okay. So you got a ways to go, and if you keep mining that properly, and let's say no problems down the line, and you can grow it, that's your ATM, that's your cash at hand to grow this business. Is that the way you're looking at it? Because you're not shy on doing deals.
No, look, the deals is because we have to have diversification and we have to take advantage of being a company that makes money. Last year, we did $170 million in EBITDA. So it's a nice amount of money, comfortable for a company that had no money and 8 years ago was in a restructuring mode. So this has been an incredible turnaround for the company. And although sometimes investors forget, last time 2 years ago when we spoke, the stock was trading at $3 or $2.75, and even with today with the market, we have some people that complain that we should be worth more. We all like to be worth more. The stock trades in the $5-6 range all the time. So we've given incredible return to investors. We have a stable company now that makes money, and that gives us the opportunity to look at deals like Goldex or deals like Denarius. That is another deal that we just invested in.
But here's this one I'm trying to get at, Serafino, is look, you've got a mine in the shape of Segovia, which is throwing off cash, right? That's a nice simple story. But then you do things like you're kind of quite creative financial structuring that you did in the early days to kind of get yourself in a position to take advantage of Segovia. That was kind of unconventional. So you're starting to do unconventional things. You're spinning out a company and creating another one. So with Aris Gold, that's great, and that's probably a nice story in its own right. You've got 44% of that, which is super. We probably won't talk too much about Denarius today, and you've got Goldex. There's a lot of moving parts here. Do you think people are finding it hard to actually pigeonhole you and go, "This is what Gran Colombia is about"? Are you? Is there? Do you need to strip it back a little bit for people, perhaps?
Well, look, you got to take a direction when you put a business together. If I want to be a company that clips coupons and just sits around to wait that eventually this mine is going to be a one mine that produces a steady 200,000 ounces of gold, and maybe it'll go to 250 or 300 And that's where it's going to be for the rest of its life. It's one type of a company. We are in the model of a Mavericks like Yamana. I mean, Yamana is not a mine that stops and said, all right, we just have a fantastic mine now. We'll just clip coupons. And my job as executive chairman of this company is to create value. We already are in the process of realizing value and increasing value in Gran Colombia. But if you stop there, then you might as well sell the mine, because you reached what you have reached. What do we want to be? We have to decide. We were a little child. Now we are a teenager. Now we want to decide what do we want to do when we turn 18 years old. And Goldex for us is the 18-year-old. We want to be a mid-sized producer. That's what we announced that we want to be. And that's the direction that we're going to take. We own 44% of Aris Gold. That is a fantastic mine with 6 million ounces of gold, but we don't want to run it. We already have a project that we're running in Colombia. We have a fantastic team that runs it. We're happy to be investors. Someday that investment, it's either going to be an investment that we're going to distribute to our shareholders, an investment that we might sell and realize value for our shareholders. But now we decided that the next place that we want to be is Guyana. And that's where we're going to be developing this multi-million ounce project.
Right. Okay. Fine. We haven't talked about Toroparu. But do you think, in terms of valuation, every CEO says that we're undervalued, right? But you guys genuinely seem to be just valued on your cash production, not necessarily about the ounces in the ground. It seems you're whatever, your 500 million market cap today. You got 44% of Aris. You got 27% of Darius. You've got Toroparu. You've got Goldex. It's like people aren't valuing those things and coming up with the sum of the parts.
It's a puzzle to us, because I give you a very simple breakdown for just to have an idea. We sit on 100 million Canadian in cash right now in the bank. We're a company that pays a dividend every single month, so we make money. The value of Aris Gold is about close to $180 million. The value of Goldex, we just bought it, $250 million. You got $400 million right there and then. Another 50 million out of Denarius. So it's $450 million in value. So you tell me there is a disconnect between investors. That's the job that we have to do. That if I look at it the way I look at my businesses all over, I look at a company, what is this company worth on a breakup value? And if I sold Aris Gold and if I sold Denarius, because there are commodities that I have, the cash is cash. There is nothing, cash is cash. And I take all of these pieces and I sell them, how much money would I make? And how much is Segovia worth? That's the way I see it. And I know that Segovia is now worth $50 million, or Segovia is worth $450 million, and all the security and the cash is worth zero. So where is the disconnect? We are a story that has gone through fixing itself, getting itself going. We're trying to find an identity of what kind of company we want to be. We've decided that we want to be a mid-sized company that grows and creates value for shareholders. I think we've done that. Our next job is going to be to go to investors and realize institutional investors how valuable this company is and what a great company is for growth. That's the job that we got to do. And I think that there's still a lot of people out there in the market that remember Gran Colombia for being what it was 6 years ago and not what it is today. And the people that realize it are buying shares. I mean, we trade 600,000 shares a day. I mean, we're a very liquid company. For good or for bad, we're liquid. We're not an appointment-only company that trades.
So talk to me about the share registry. I mean, how's that break down?
Look, and this is where the problem I think that we believe that we have. When we fell at a point, we have about 50% of our shareholders are institutional investors or sizable investors. I would say probably 55. The other 45 is small investors. Some of them have been long investors of ours and like what they've seen. They've seen the growth. Some of these guys bought shares at 75 cents. Today, they're worth $5. It's just that people forget that this thing used to be 75 cents. And we are in the hands that I believe one of the things that I totally dislike of what's happening in this modern market is the exchanges allowing naked shorts. And I think we have fallen into the hands, like a lot of these mining companies are, in the hands of these naked shorts. Brokers lending shares, electronic trading, doing trading, shorting stocks, and doing. They're in, they're out, they're in, they're out, and it creates an instability in a stock. And you can see it in the trading of our stock. Gold goes up, our stock goes up. Gold goes down, our stock goes down. And it goes with electronic trading, with anonymous trading, blocks of 100 and 1,000 at the biggest. It's not anybody like institutional investors buying and selling this thing. Our job now as management is got to be to go and change that demographic of the remaining 45% to be 25% retail investors and give that liquidity that makes the stock attractive to computers to go away.
Yeah, no, we've had a couple of companies on here, and we've actually interviewed someone about naked shorting specifically. But there's a lot of people go, shorting should be allowed. Naked shorting obviously is illegal, but it's part of the market, and all you can do as a company is get on and do your business. I suspect. So, if the one thing that you can do to change it is move it into institutional hands. Do you want to do that in Canada, or do you want to do that in the US?
Well, what we want to do is we are seriously thinking about listing in the London Stock Exchange, which I think it's a fantastic exchange, and the big board. I think that's going to help. We have, believe it or not, a lot of the institutions that we have are mostly US institutions. There isn't that many institutional buyers of mining left in Canada, not like the old days. We have some of them that are Canadian, but mostly are US and mostly are Europeans. And so we want to concentrate. We are going to list in London. We already decided as a company that we want to do that and create a market in an area that has a need for product. And I think that's going to help us. And again, our job as management now is to get the story out there of where we're going to be. Our story has changed. We are not a one mine business. We have a fantastic mine that creates incredible amount of cash flow. It's going to do it for many years. We are going to go into Guyana and develop our next project, which in an area that I know it'll work. I've built many mines.
Okay. Well, let's talk about Toroparu. Let's talk about that. Okay. I'm going to assume Segovia is going to continue as it has been. Okay. And I'm sure you'll tell me that you're going to scale it up as well. But Toroparu, it's already got 7.35 million ounces of measured and indicated. It's already huge. It's low grade. So why, well, one, how much did you pick that up for? And what do you think that's being valued at? Because, based on what you've already told me, not a lot.
If you look at our press release that we put out, there is two deposits over there. There is a deposit that is low grade, but very fantastic low grade. It's got almost 0.5% copper, 1.5 grams of gold. It's got 2:1 stripping ratio, 2.7:1 stripping ratio. So very easy. Saprolitic material in the first 250 meter, open pitable. So it's very low cost, no explosives, no things. That's the big deposit. But there is a new deposit that was announced by the Goldex people, that is the Hill project. Hill's got in resources about 3.5 million ounces. It's got a million and a half, very well defined in an open pit, but with a big difference. It's 2.5 to 3 grams per ton. Open pitable, first 250 meters saprolitic, then it goes underground and it's got a strike length of 3 kilometers, still open, underground. So we know this type of deposit because I built a mine called Choco 10 about 15 years ago in Venezuela that I sold to Gold Fields. It's the same kind of mine. I mean, I take the picture of the old and put it in, this is the same. So we see something that people haven't seen, which is this early stage deposit that we can take advantage. It can be built at a very low cost and develop a project very fast and take out 2.5 gram material. Now, 2.5 gram material, you're talking about $200 rock, $225 rock, with a stripping ratio of 1.5 to 2:1. Okay, even 2:1 stripping ratio, it's nothing. It's an earth moving operation with a very low cost gravitational free gold. There is no complication in this gold. And the copper is there, and it's very good copper. Over here, it's about 0.5% copper. So it makes money, and it makes great money. In 4 months, what we're going to decide, by August, we're going to have a scoping study that's going to tell us what direction to take. And that's going to be our first scope. It's not going to be the 6 million ounces. It's going to be the smaller deposit.
So when you say it's low cost, low entry cost, obviously you've got a scoping study to do, but again, you tell me you sort of looked at this before. What number?
It's going to be about $300 million to build a mine that's going to process 7,000 tons a day. Build the whole facility, including the building of the plant and everything, about $300 to $350 million. Putting a lot of contingency on top. We're going to produce somewhere around 170,000 to 200,000 ounces of gold, and about I think it's somewhere around 10,000 tons of copper if we want to put the copper plant in there. So it's a very profitable thing.
Right, but over what time frame are we talking about? Because obviously you're going to be diverting cash. Well, you're going to be taking cash straight from Segovia, putting it in the ground. You have to raise some cash.
The good thing that we want to make clear to investors is Gran Colombia right now sits in a very comfortable situation. Number one, we got Wheaton that is ready to write a check, and we have an agreement for them to write a check for $150 million. So the money is there. And Gran Colombia these days, that is a B+ rated Fitch company. And by the time we finish this feasibility and we start deciding how to take that thing, we're going to have zero debt on our book, has the capability of going into the market and raise debt to build this mine. We are not going to be putting equity out to develop this mine. It's going to be done with debt.
Okay. So what's so Wheaton 150? You go to market, get some more debt. What's the time?
We got 150 from the market. We got 300 million. We got 300 million for Marmato. We can get 150 for this project.
Okay. So back to the question, which is then when does that start contributing towards the bottom line? What's the sort of time frame to get it up to speed?
If we have the capability of using the Zijin plan, we could do it with less than 8 months. If there is no capability of using the Zijin plant that sits 30 kilometers, 40 kilometers away, if we don't have the capability of doing that and we have to build our own facility, 24 months will be in operation.
Okay, so between 8 and 24 months. I mean, I'm talking of Zijin, you're dealing with those, well, effectively a government entity there. Are they quick to respond? Are they helpful? Are you encouraged, or is it a certain way?
I'm very encouraged. You know, they're very smart miners. They did a fantastic acquisition in Guyana. They're ramping up their operation, the Aurora operation, which is, like I said, 40 kilometers away from us. We believe they have spare capacity. We have to sit down and seriously analyze if they have the spare capacity. But even if they have the spare capacity for 2 years, 3 years, that gives me the time for me to use it, process, start the pit, and then build my own facilities. The reality is that even if I don't have their capability of doing things, because they're a monster of a company. They're bigger than Barrick, if you look at it in market cap. We're going to build our own facility.
How much additional capex will that require? And I assume you're going to say that can come from debt, whatever that number is.
We believe it's somewhere in the $300 million range.
What's it if you manage to do the Zijin deal? Less?
Well, the decision will be probably half, 150. And there is the money already in place with Wheaton.
Yeah. Okay. So I'm just trying to do some numbers in my head. I'm trying to understand the timing of all of this, because it's all about the bottom line. Because a lot of companies, big companies, fall into the danger of any money they produce gets plowed back into the ground to develop future. You know what I'm saying?
And we earn the money that comes out. We got to have discipline, and we've been very good at discipline. We've shown it to reduce our debt and what we've done in Segovia. Although Segovia is a cash cow, part of that cash is going to go, number one, projects have to survive by themselves. You cannot borrow from one side to put it on the other side. That's an exercise in futility.
It happens, right?
Well, it happens, but one has to learn lessons from their past, okay? And believe me, we've seen it. We're making money here, let's put it here. No, the project's got to be a standalone project. And the Toro Peru project is going to be built as a standalone without using the money of Marmato, of Segovia.
We shall see if you announce more to the market. We shall see how you come at it. I'm looking forward.
The proof is in the pudding,
as
they say.
Always. Now let's talk about South America. Lots of headlines at the moment about what's going on in Peru, what's happening in Chile, what was happening in Ecuador, doing business in Mexico, South America. So doing business in Colombia.
Look, Colombia is going through the fashion of what's happening in Latin America these days. You have 4 countries that are going for election at the same time. That's basically 70% of the continent. You have an epidemic that has tired, not South America, has tired the world. People have no money. Youth have no jobs and no future of jobs. And that's why Chile has gone into a revolt. That's why Peru is going, in my opinion, in the wrong direction if they go with this guy. Because again, you have to learn from the past. And if the world hasn't learned who Hugo Chavez is, or in Nicaragua, who Ortega is, then we don't learn from history. And unfortunately, Peru want to experience something that they're going to regret. And Ecuador experienced it. And that's why Ecuador this time went to the extreme, from going from the left to the center. Now it went to the center right. And Ecuador is a population, all these Andean regions have a very large indigenous population, which Colombia, by the way, does not have. Colombia, the indigenous population is only about 7%. And then there is all sorts of people. We're all mixed. We have our Black, our white, our Italian, our French, our Portuguese. So it's a little bit more homogeneous type of society. The difference between Peru is that Peru wants to experience something that I think is going to blow up in their face. Why? They lived in the last 4 years, 3 presidencies, and all 3 presidencies have turned out corrupt. Chile has lived a change in a demographic of youth that want to see more money to be given to the masses than anything else, instead of being concentrated in an area. I think we have the same problem in the US. Colombia is going through the same thing. A year and a half of not making money, unemployment, and in a presidential election with a president that hasn't shown that he should be as strong as he should have been and as prepared. Very smart president. We like him very much, but I think he could have been more forward in getting things moving. And he made a mistake. You never put a financial reform to raise taxes on an election year, neither in South America nor anywhere in the world. And they did that. And that's what started. The difference is Colombia going to go in the route of Peru or Chile? The answer is no. Colombia is a very conservative country with a lot of middle class. The most popular guy that is a left, sort of like the guy in Peru, has only 25% of the vote. For the past 6 elections that he's run, that's what he gets, 25%. And then everybody that is in the center, left, center, right, or center, at the end of election, they all get together and they say, no, we don't want that guy. And they move on. So I believe that that's what's going to happen. I'm very bullish on Colombia. I think Colombia is going to have, after election, an incredible growth. You have a government that is still very much pro-mining. It's pro-oil. They want to grow. They realize that they need money. Now that they've been told that they cannot raise taxes, they got to tighten up their belt, and they got to find a way to make things work and to create jobs. And the only way you create jobs is by having investments in the country.
Foreign investment as well. They need to encourage this.
The only investment that there is in the world is foreign investment, because nobody's going to be building a mine. Very few Colombians will go and say, I'm going to take my family fortune and I'm going to build a mine for $500 million. It's a basket.
Right. And the point I was getting to was, you hit guidance last year. Well, you've hit guidance for the last 5 years. You're going to hit guidance this year.
We are going to hit guidance, and I'm going to be as bold to say that we're going to hit the upper guidance more than the lower guidance.
Okay, cool. Look, I think I'm just conscious of your time. We have covered a lot, but at a very high level. I wonder if we can get you back on to talk about, or even some of the other CEOs to talk about some of the actual projects specifically. Okay, now that we've kind of see how it all hangs together. Anytime you want. I mean, we wanted to make sure, if you remember, because I have a pretty decent memory still. Thank God that they invented this medicine for Alzheimer. The conversation that I had with you was, give me 2 years and we will have a conversation at one point for us to see what this company is. You look at what this company is from 2 years ago when it was trading. I think actually it was more like 175 a share, because we did an issue at 220, okay, at one point. So this company was trading at 175 2 years ago. Today, this company went as high as $8. Some people are complaining because, unfortunately, investors have a very short memory, but that's the way it is. I'm very happy from where I used to be. We used to be a 25-cent stock when I picked up this company. Today, we're at $5.14. I'm very happy with $5.14. And our investors that invested with us a long way are there.
So we have a lot to talk about and we have a lot to show. And like I said to you, the proof is in the pudding. I would love to come back to you and talk to you about Goldex, how fantastic the company that we created is. Aris Gold is going to be a fantastic company in the hands of a fantastic manager. You should interview him. I think he's worth interviewing him 1,000 times. And what we're going to be doing with this company from here on, also to diversify with the next project, that is the project that we picked up in Spain, that we believe that it's going to be. So we'll do another story. You tell me, invite me.
I'll invite you. Don't you worry, Serafino. We'll get you back on real soon. And we'll do a little deep dive on a couple of those things. Great job. Let's not make it 2 years next time. But we will be in touch, and I appreciate your time today. Thanks very much.
Call me back in September. Thank you.